In 2020, glove stocks made many people millionaires. But at the end of the year, it also made people lose a lot of money. Some are wondering if glove stocks will have a future. Can they recover, or is it the end?
So long, partner.
Hi, I'm Frankie. Welcome back to my fuck show, Frankie Answers Questions. Today, we will talk about glove stocks, how this money-making machine became a trap.
It's a trap!
And what's the future moving ahead? Is there hope if you are stuck? Question 1. What happened to glove stocks? When the COVID-19 pandemic broke out, healthcare services providers, massage parlor, hairdressers, basically everyone started wearing gloves to ensure personal hygiene to avoid being infected by the virus. As a result, the demand for medical gloves skyrocketed due to this shortage. Demand surge and average selling price for gloves increased, making it highly profitable business to be in. Many glove manufacturers experienced more than double growth in earnings in 2020. At the same time, there was a significant increase in retail participation in the stock market that amplified the insane increase of stock price on glove companies. However, by the end of 2020, when many investors thought that prices could go higher, stock prices started tumbling down, leaving many of them stuck in their investment. Actually, this is not a new story. It happened before between the 80s and the 90s. There was a similar rush to start up glove-making businesses when it became known that they could break even in just a year. Where to find this kind of gold mine, right? Anyways, most of these new startups were mom and pops type of startup, and as many as 400 businesses were registered at the time. What they might not know at that time was that because there was a glove shortage, many buyers were double booking to ensure they secured gloves they needed. These buyers made multiple orders with several manufacturers for every order they actually needed. Eventually, the industry went bust when the buyers pulled back their orders, causing many companies close shops, leaving only around 40 players that existed prior to the COVID-19 outbreak. However, at that time, the glove frenzy was not as sensational in terms of value traded in the market compared to what has happened today. The point I want to make is that while many retail investors are surprised, based on my conversation with experts in the industry, it is something that is actually within their expectation.
I knew it.
Question 2. Who are the new players who jump on the glove manufacturing bandwagon? One thing you may have noticed is that after seeing the major glove manufacturers making a fortune in the business, numerous new players are drooling to have a piece of the pie. A good example is Johan Holdings Berhad, a company that is more ambitious among the newbies getting into glove manufacturing, planning to build 42 lines within 20 months with the hope of hitting 2 billion revenue from it. Another significant entrant is a property developer, Masing Group Berhad, which has 12 production lines that churn out 3.7 billion gloves a year. This glove frenzy was not just limited to local companies. In China, the glove makers there are boosting production to meet rising demand from the US and Europe, with orders inquiries jumping by 10 to 20% in weeks. This is partly due to the production disruption caused by the MCO in Malaysia. A company known as Blue Sail Group from Shandong province said that in July 2021 alone, a new production line with capacity of 20 billion gloves annually will go into operation. On top of that, another 10 billion capacity is under construction. To give you a context, Top Glove currently is able to make 100 billion pieces of gloves annually, and they themselves will increase production by 50% in the next 2 years. Judging from the huge new capacity coming on stream, according to a research done by Vital Factor Consulting, the supply of glove is expected to exceed demand by 18% by 2023. Followed by a 49% surplus in production capacity by 2024. Question 3. Does it mean that there will be oversupply and the business won't be good in the future? Actually, I don't think so. I think the demand will just go back to normal gradually. Let us not forget that the growth from year 2020 was a black swan event, something that was not expected by anyone. So, it's unrealistic to expect such number to sustain. As for the question of oversupply, under normal circumstances, the demand growth for glove consumption is around 10 to 12% per annum. This means the global demand growth should be around 50% more by 2024. Based on the report by Vital Factor Consulting, the glove supply of glove matches just nicely. Because of that, chances are the average selling price of gloves will decline and the market expects it to go all the way back down to around $30 per 1,000 pieces of gloves. From the business perspective, they are still fundamentally strong. In fact, they are still planning ahead to build more capacity for future growth. Question 4. So why share prices drop like that? For many investors, especially those who are new to the stock market, they often confuse short-term share price with business fundamentals. A share price may not be able to reflect the fundamentals of the business operation in such a short run. Often, share prices may overreact to news flow because people are just emotional and sometimes looking at glove stocks, the market overreacted in 2020, sending glove stocks valuation way ahead of its time. At this moment, the market actually expects the average selling price to normalize back to what it was prior to the pandemic. And because of that, we can see that glove stocks are being sold down aggressively. Could it be that the market is overreacting again? Once again, this tells you that the market is never a rational place in the short run. But it is this inefficiency that creates opportunities to make money in the stock market to begin with. Question 5. Since there are other glove companies globally, how will this affect Malaysian glove players? Honestly speaking, I'm not too worried about threats from overseas companies. This is because Malaysia is strategically located. We have easy access to raw materials for latex and nitrile gloves. On the other hand, our labor cost is still relatively low. This is a comparative advantage that is hard to replicate by other countries. Think about the US. While they can plant rubber trees in South American countries, their labor cost is high. China may have lower labor costs, but they do not have good access to natural rubber. I think as long as our glove companies continue to improve themselves, they are in good places. Question 6. Recently, some of our Malaysian gloves were held back by the CBP in the US. How will this affect us? Yes. In fact, I think this is a point of concern. We are not in the 80s or 90s anymore. Today, a lot of focus is put on ESG, environmental, sustainability, and governance, instead of merely evaluating a company based on the availability to churn out production volume. A company has to comply with ESG standards, which is commonly neglected among many Southeast Asian manufacturers. A good example is Top Glove, when their products were held back by the US customs due to alleged ESG issues. Now, the world knows that the US means business when it comes to this. According to one of the industry players, Hubs Holdings, which plans for an IPO soon, there are stringent social compliance and superb supply chain planning requirements in order to be in the glove business today. Buyers from countries such as the US will check the entire supply chain and company processes, right down to the types of chemicals used and the source of those materials. The point I want to make is that manufacturers will need to comply with ESG standards, which will indirectly increase the cost of production. On top of that, the average selling price of gloves is expected to soften. Will these factors dampen their profit margin? Question 7. What should I do if I am stuck in a high price on glove stocks? Well, I don't think I have the relevant license today to give you any advice, so I can only comment based on my personal opinion. Please don't take this as investment advice. Personally, I think the glove business is still fundamentally strong despite an increasingly challenging environment. If you don't need the money in the near future and you too think that glove companies are still good investments, you could ride it out as the management continues to grow the business. After all, just like what Benjamin Graham mentioned, in the short run, the market is like a voting machine, tallying up which firms are popular and unpopular. But in the long run, the market is like a weighing machine, assessing the substance of a company. Question 8. Glove stocks can buy? I think I've probably painted a gloomy picture on the glove sector so far. It is only fair if we look at things on both sides of the coin. From a business perspective, I'm sure that companies have done a considerable amount of feasibility studies to know that the lucrative nature of the sector won't last forever unless they are just creating news to lure punters to buy their stocks. Hopefully that means that they are seeing strong fundamental growth on gloves in the long run, even after taking into account the threat from new competitors. If not, what they are doing is just catching the wave of euphoria and riding on the market sentiment for quick money. That's all we have for today. #5.